the Bushels and Beef Farm Tour and Podcast, where producers talk markets, share stories, and cut through the noise in agriculture.
All right, welcome back to the Bushels and Beef Podcast. I'm Nick. If you haven't reviewed your 2026 crop insurance options yet, it may be a good time to take a look. In many areas, ECO premiums appear to be coming in lower than last year, and the added coverage can still be meaningful, though the exact numbers will depend on your county and policy. Before we jump in, we wanted to highlight today's sponsor, Logic Ag Marketing. At Logic Ag Marketing, they are committed to enhancing the success of their clients and producers, serving as an advocate to manage the risk and secure the lasting prosperity to enable the handoff of their farm or ranch to the next generation. Today, we've got Jordan here, and he's going to walk us through what's changing and why crop insurance is worth considering as part of a broader risk management plan. Jordan is a crop insurance agent from Alta, Iowa, now in his 12th year, and he'll share how some producers think about tying insurance decisions to marketing strategy, not just lender requirements. Jordan, welcome to the show. Coffee's hot, coffee's strong, so before we dive into the ECO and subsidies here, let's talk about some real life things. You know, what's a moment from the last week that had you rolling your eyes or shaking your head, whether it was on the farm, at work, what's going on in your life?
Right now, the Hinkeldey house is at full-blown basketball mode. The kids are involved in 2 different teams and probably about 4 practices a week. So it's been super, super busy that way, along with everything crop insurance. But my 10-year-old son, he actually just busted his elbow last week, so that kind of ended his season. He was pretty disappointed, but the other one, he's picking up his slack for him. He's always rambunctious. Hopefully he gets over it. He's pretty positive about stuff. He's more upset about not being able to shoot his bow and arrow, more than anything. So he's kind of got that going for him. So kind of a eye roll moment. He's broke his elbow before, but now we're going through it again, and it just seems like he has that luck sometimes. So it's just he's got a positive attitude though, and he's doing good with it. So good.
Is it the opposite elbow now too, or is it the same one?
Yep. Now it's the right elbow, so he's got a lot of time to work on his left hand. And my wife, she's pretty disappointed because she's pretty high strung about basketball with these kids. So she'd be the loudest one. She's the loudest one in the gym when hear yelling rebound and everything. So yeah.
Yeah. Speaking of basketball, I know you're a big Iowa State fan. How's this season treating you?
Yeah, we had a rough week the week before. 2 losses. We were in Nashville watching the one, and it was pretty embarrassing sitting next to all those Hawkeye fans that were, with us, a part of the Logic crew down there, just getting boat raced by Cincinnati. But, now we're coming back, bouncing back. Hopefully we can get some stuff straightened out. It seems like everybody's coming along. So, yep.
Nice. One more thing I have to ask you about too. I know Alta, Iowa has been pretty windy, pretty cold this year. You've got a nice beard there growing out. Tell us a little bit more about the beard that's going on there.
Yeah, if you see me touch my face, I'm not used to this thing, but a couple of my friends hang out with over west, west of Alta here, gave me shit about not growing my beard out ever, and so I had to kind of prove I could, put one on. So yeah, I think I'm gonna keep this till sales closing date's done, and then maybe shave her off after that for summer, spring and summer. So
yeah, I know. I hate that under chin scratch there. That's always the worst.
The worst.
You're in your 12th year as a crop insurance agent, right?
So I started in 2011 into 12. So this will be actually about the 14th year. Yep. So the 14th year this year, I believe. Yep. So it's my dad, he started doing it in 04 or 05 with my uncle. And they were out of Holstein, Iowa there before. And when I came back, it was just one of those things he kind of handed off. He had a smaller book, and we've just kind of taken it and kind of ran with it. I joined these guys. We all kind of joined together, and 2020, 2021, kind of post-COVID, we started talking about stuff this way, and we've just been kind of trying to grow ever since. So it's been a really good time, being with all these guys. So. Mm-hmm.
Yeah. On the crop insurance side, since you've started, has the industry gotten easier or more complicated, or How's the transition been over the last couple of years, or even since you started?
Yeah, conversations and meetings with producers are getting a little bit more complicated because every company is going to have its private product now. When we started, it was just a simple, hey, are you going to do 80 or 85% in optional or enterprise units? So now the conversation is, hey, do you want the company added on product, the ECOs, the SCOs, all the acronym names for any kind of product you can think of, between adding price or adding a band of coverage higher, just like ECO does. It adds that 86 to 95% level coverage. Other companies are saying you can do it personally with different yields, and then there's caveats on each plan. So, you gotta, we sell between 5, 6 AIPs. So, we got to keep our, ducks in a row on that with all the different plans, and, try not to overcomplicate, things, and, make the producer want to stop listening, because it can get overwhelming, at times, listening to all those different products. So, and we don't want to do that.
Yeah, definitely not.
Well, it's changed dramatically. Yeah. Yep. So,
Yeah, let's see if you can just rattle off like all the different acronyms, or like the short versions of it, like ECO,
yep.
all
Yep.
that.
So,
Let's just
yeah.
rattle them all of them off.
So, you go ECO, SCO, RPO, MCO, uh, FMH has their ECO plus, and then there's RPO with rain and hail, and then I think it's RPP with RCIS, and then Area Plus RPP. It's just so many acronyms, and everybody's like, oh, why is crop insurance filled with acronyms? It's like, I don't know. It's just there's so
Yeah.
many of them. I think they just keep throwing stuff at the fan. So.
Yeah, I was gonna say that's probably when those producers are probably just like, please just help me. Let's just get what I need. I'll leave it to Jordan here. He's the pro. He's the best, and I know you probably take care of him just right.
Yeah, yeah, I got a lot of guys that trust what I take out personally. Like in our office here, we're also me, Shane, and Freddie here in Alta. We're also producers. Also we help our family farms, and we have some ground ourselves that way. So we know what we're taking out because we sell it, but we also know what we're taking out because we use it, and we pay for it just like the farmer does. So we understand the costs and the requirements to keep that coverage and have it work for us. We're not just out here selling stuff and saying, oh, you have to take this because this. Well, we know it because we've used it, and we've had claims on it. It's protected us, so we're right there with the farmer, in that aspect of it.
Yeah. So with that, let's dive into what's changed for 2026, because I know there's quite a lot to cover. So we'll jump into our next segment here, the main dish and crop insurance for 2026. So Jordan, you said the big topic this year is ECO and the subsidies. Walk us through what's changed there.
Yeah. So the one thing that the one big beautiful bill, we can all say that thing has tremendous amounts of fat, in that bill, regarding other things and other topics. I'm not getting political here, but, this was involved in that, subsidizing these premiums for the farmers, which it came out to be a huge thing for us as farmers. ECO, when we started this, I'd say in 23, it started kind of getting a little ground because prices were higher, but that policy back then was like $28 an acre, in our county, to $30 an acre, depending on your APH. Last year it got down to $15 to $17, because they subsidized it from 44% to 65%. Well, now this year they're subsidizing it from 65% to 80%. So now that policy on corn, that's going to be a $8 to $10 an acre policy for some really good broad coverage, area risk coverage. And that's going to add on to our policy. It's going to be almost impossible not to take out as a producer with the kind of benefit price wise that we get. It's just a lot of bang for your buck for coverage, on corn, and then heck on beans too. We didn't have many guys take out ECO coverage on beans last year because it's like, it's at that $10 to $11, $12 range. This year it's going to be down to $5, $6. So it's going to be like, well, it's right there. And for $5 to $6, we know stuff's tight, but I think a producer's going to want to grab, $5 to $6 of premium to pick up, 50 to 60 some standpoint, 65 to $70 of coverage, an acre, and be at that top, from 86 to 95% instead of at your MPCI level of 85 and below, So when we start getting up in that 86 to 95 range, that's where the claims are, from the standpoint of price loss and yield loss. So, I mean, it's changing how we do insurance, so guys aren't just taking out their normal base policy now. I think it's going to move towards more of a stacked coverage from the standpoint of let's have our enterprise unit underneath or our optional unit or MPCI policy. Let's put SCO, which is that 80 to 86% in there, and then let's add ECO on top of it. And virtually we're adding a lot of coverage for a lot less premium. Guys are going to be saving some decent money this year. I'd say about $7 to $10 an acre on that same exact policy from last year. So that's a huge positive for producers.
Definitely. And probably like what my dad would say or your dad would say, that's a no-brainer.
Yep. I don't know, there's my dad, he was pretty critical of this, when he was, he retired in like 21, 22 from farming, and he's like, why would anyone take out an area-based plan? And like you said, now he's like, I don't know why anybody wouldn't now, it's so affordable. So yeah, there was criticisms of this stuff before because that price was pretty high. You're talking, almost 3 to 1, coverage to premium. Now you're talking dang near 10 to 1, coverage to premium. So that's huge. That's huge. It's a lot of bang for the buck.
Definitely. And like you were saying too, like EOC is area based, basically countywide and not individual farm EOC side. Okay.
So ECO. So that's going to be, it will be your guarantee in that 9% window of that 86 to 95%, above your MPCI. So it'll use your guarantee of your yield, but it is countywide. So when say we have what happened last year, and in our county, we're seeing yields coming in, getting reported, and they're a lot less than the year before. And the year before, I think we were only about 2 or 3 bushel higher than our county average. And if we come in even at 2 or 3 higher than our county average, we're going to have a hell of a payment, come June for this ECO payment from last year. So, I mean, guys are going to, hopefully we get a nice surprise here in June and guys get some decent payouts because, that we have to wait that long for it just because we're waiting on guys' yields to come in and they use that RMA yield from the producers to determine that yield for ECO. So, I mean, it gets confusing, but, you just gotta trust it, trust that it's going to be there. And, the more they cheapen it up, the easier it is to take out.
Mm-hmm. So yeah, kind of touching on those county yields that you were talking about. So it's definitely great for producers who correlate with those county yields.
Yes, exactly. So I mean, it's kind of how we're taught. They're like, hey, if a producer's in every county is completely different. I mean, you have your counties that are pretty uniform across, but you'll have different counties where if you're on the wrong side of it and you're not, say when you're having good years, the county's having bad years, people can argue that, you probably shouldn't be taking it out or take it out. I think with the price where it's at, I think it's, like you said, it's tough not to take out ECO on top of your policy. I also, we talk about stacking coverages and, you hear agents say, hey, let's back off to 80 instead of 85 personally. Well, we've had quite a bit of producers at the 85 level actually claim out the last few years. So for guys that are having claims on your regular 85% policy, I don't think I would back off, from that. And I think it'd just be an additional add-on for ECO. But for the guys that have no luck, with their personal policy, back the coverage off, add the ECO on top, and, let's see what happens. Because, if we're adding more coverage, typically it means we're adding more protection. So that's what we want to do.
Mm-hmm. Yeah, is there anything else you want to add on the ECO subsidy or anything like that on the ECO side?
I just think it's a big positive for the farming community. I mean, just more
definitely
more coverage for less dollars. So let's just, I think that's great. Yeah.
I think that's what we're all kind of looking for across the board, right?
Oh man, I wish, every insurance premium would come down. We just got our health insurance one the other day.
Right.
Oh man. Yeah, might not take it out. I'm getting older though, and everything starts hurting more, and I kind of want to go in for that stuff. But now
Right.
I'm like, it's getting spendy.
Just rub some of that tractor grease on it or something,
Yep,
right?
yep. Just kind of bear down and get through it. Yep, 100%, 100%. So,
Man. Another interesting point that you had brought up too is the MPCI premium savings and then the beginning farmer help too. So ECO premiums are down. What about regular MPCI policies here?
yep. So they're going to be subsidized from that 80. Let's just say the normal. I'd say the average producer takes out 80 to 85% coverage. So that's going to be subsidized another 3%. So we could look to be saving another 5% on our MPCI policies. On top of the ECO being discounted, our MPCI, we're going to fall a couple bucks an acre, from that standpoint. Optional units might be a little bit more, but the enterprise units, and, again, enterprise units are when you throw all your production into basically one ball of wax for the county. We're going to see about just a couple bucks an acre reduction, which anything right now is farmers. I think we'll take any kind of discount we can get during a low price year like this. So
Yeah.
and then the other thing, the beginning farmer thing, absolutely huge for guys that are starting. I mean, I think the last few years it was basically, hey, if you're within 5 years of starting farming, any Schedule F, whether it was livestock, cattle, anything that way. Basically we just got you a coupon from Altamart down the street. It was just very little. There wasn't anything, too positive about. I mean, I think it was $50, which, we filled out
Yeah,
all the
yeah. I've got
for
a
50.
note here for 50
Yeah.
bucks. Yeah, it was 50 bucks last year.
It was something like that, and it's like now, they're adding an additional for beginning farmers year 1 and 2. I think that's at 15% extra subsidy, not discount, that's extra subsidy on it. So, I mean, a producer that's spending, what we would normally pay as a producer would be like 20 bucks for like an enterprise unit. They're going to pay like 5 or 6. I mean, it's a tremendous savings for these beginning farmers, and I think it's much needed because if guys are starting off in this area of farming right now, it's kind of tough out there. So I mean, we're seeing this discount help these young guys out, maybe get a 10 to 15 buck an acre head start on their insurance premiums. So I mean, I think it's super beneficial that way. It tiers off. It goes. I think it's 15% extra subsidy year 1 and 2, and then 3 and 4 are like 13, 12, and then I think 5 to 10 is a 10%, 10% extra subsidy. So I mean, it's absolutely awesome. Awesome to see the government step in and do something more for those beginning producers to give them a good start.
Yeah, and, not to correct you here, but it's just year 4 is 11% off. So just
Yep.
to
Yep.
clarify things there, 11%
Yep.
off for year 4. But
Perfect.
yeah, staggered throughout there, 15, 13, 11, and then 10. So
Yeah.
yeah, like you were saying, a ton better than 50% off or $50 off coupon there.
Yeah, exactly. I mean, I wish I had this when I started. That'd been awesome. I mean, that's really awesome. It's a good savings for them, and I'm glad they did something like that. So.
Yeah. Would that have like kind of covered your learning curve in a way, or like kind of subsidized your learning curve?
Yeah, I guess when we started, like I said, that's kind of when I started in insurance too, is when I started farming. At that point, we just had the MPCI. But, during some of those years when the premiums were, when we had $6, $7 corn, those premiums were in the 30s, 40s. So, I mean, a quarter of that would have been insane, So, I mean, that would have been a heck of a start that way. I think it'll help, push maybe some guys to maybe move some ground over to their kid if they're getting that big of a discount off of something that substantial, and it's a good thing to start your kids on some ground that, you have personally, instead of starting them off with maybe something that you haven't been farming for a while and it's just a new cash rent. This way, they can start, have a good start, have a cheaper premium, so.
Yeah, a good start and some good savings right there off the bat for them.
Yes, sir.
Cool. So yeah, last year's ECO example, you put out a newsletter, or kind of like a 2026 crop insurance newsletter here to the subscribers on the Logic Ag newsletter. So if you aren't subscribed already, definitely head to the website and get signed up for that. But you ran some numbers in your newsletter from last year. Walk us through what ECO actually paid out, if you're able to share that.
Yeah, so the newsletter here, I read it once a month for crop insurance because I don't think guys want to hear about crop insurance every day. It ain't a light the world on fire kind of topic. I understand what I sell. It can get boring. But no, I basically kind of gave guys a heads up. Like, this last year, a lot of producers, it was up and down. We had disease all over the place, and the yields are coming in a little lower. So we're just taking, Sac County, for example. I was just showing producers, even if we produced over our county, product, I think I had an example in there. They're at 224 for projected, and even if they produce a 230, with the price dropping down to 422, I mean, the payout on ECO, even at that, even with a bushel gain, it's still going to be like $32 an acre. If we do stay at that 230. I mean, I know some guys. I know there's yields out there that hit 250, or above. But I think there's a lot more straggler yields out there with fungicide issues, disease pressure, everything like that. It might drag us down to those points, and we might see some bigger payments. In BV County, I think it's going to be bigger than that. I could be wrong. We all can be wrong until we're proven right. So, but I just think from that standpoint, it's just a great add-on. I'm glad we're paying less and less for it. So, I mean, when we do, say if it doesn't pay out, in a year like this where it's $8 to $10, it's still a good shot, to take on it, because you're shooting at that coverage level of $85 to $95 an acre. For $8 to $9, and it's pretty cheap. And I had a slide, here for our producers coming up, and I think typically you see, I mean, even in Iowa, if you want to say, I mean, if you spend $1 on ECO, in our county, in BV County here, it's returned, I think, over 20 years. If we would put this product back into play 20 years ago with the premium that it's set at, it would return $3 to year one in BV County on corn. So that's, I mean, if you took it out every year since back to 2004, I think it was. We just went back 20 years, and that's not, it's not saying that that's what's going to happen in every county, but that's what's happened in our county, and that's why I think it's gotten a lot more popular here, and it's getting a lot more popular around the state, and in any other state, So, I mean, I think it's just a good product. So I think we need to. It's a good look to have at it, and I think guys should be more interested in that than ramping up on anything else. So.
Yeah, are you getting a lot of inquiries about that? Is that kind of like the main topic for you right now?
Yeah, I mean, a lot of our guys were already in it last year, so I mean, they're gonna they're gonna probably see hopefully the first year that they take it out, they're gonna see a payment on it, and they're gonna be pretty happy about it. Even if we get a minimum payment on it, even if we cover our costs on it, at least that's covered. It's a cost that's gone, is our insurance costs. If we pay for that, and then heck, if we double it, if we get a $30 payment, then we dang near double our last year, and that's at that point, that's found money at that point. So, it all goes back into our break evens and everything. So, and anything's going to help this year. So if we have insurance behind us. We got our farm programs kicking into this year for 2026. We're gonna hopefully get a payout for that in October. So I mean, and then maybe that bridge payment. So I mean, guys, there is some stuff coming for them to kind of ease a little bit of the pressure off of the community as a whole. So
yeah, definitely. Let's move into talking about tying insurance to marketing. You guys there at Logic Ag have quite a bit of experience on insurance, cattle, livestock, commodities, things like that. So you guys are really effective at bundling all sorts of services together to really make an impact. So, when we were talking earlier, you mentioned something about not just tying insurance to your lender, but tying it to your marketing. Do you want to dive in on that thought there?
Yeah. We were talking, last year, I'm using last year's example because we have that set, we have that price set, we know how it ended up. If we just took, our general 85% plan and plugged that in, guys with shallower losses, maybe, we wouldn't even have any kind of claim or any, if you take 85% of that 470 price from last year, that lands you at $4. At $4, most guys last year were around a 425, 430 break even. At $4, that's not really helping all too much. There is a lot of good coverage there in case yield loss happens, or, we're covered for yield, we're covered for, if we want to add hail or replants, our policy does a lot for us other than protecting us that way. Where if we add on the ECO or any, top product, like any kind of banded product above or add on price, we move that number higher, and we can move it above last year we moved it above our break even. I think last year at 95% of 470, keeping yields the same, that was like let me look at it, 447, and on, if we call it 447 on the board, if you look at last year's chart, I think we could only sell above that number until June. I think we put our high in February, which is really, really weird. And really, really odd, because it normally doesn't happen. But, the sales that we could have done during February through March and April and May, we're still, I think May we went over 475 again. We could make those sales, and we can raise our bottom line, up from each sale we make over top of our guarantee. So if we're making sales above 447, that brings our coverage up, because every sale we make, we're covering less bushels than at that point, physically. I mean, excuse me, just getting over a cold. But all that, tied together, with your marketing decisions, if we're marketing ahead and we're making good sales ahead, we keep raising our bottom line. And that's what we want to keep, letting producers know is like, hey, when we take out our coverages, our points are here, and we want to be selling either here or above. And we want them to kind of know that, hey, if we start doing that, we're going to raise our bottom line, and hopefully make everything better that way. And hopefully the prices go up, if we make a sale. We want the price to go up. We don't want it to go down. We don't want to use insurance. I shouldn't, we're here just to be the backfall, but we don't want to use insurance. That means it's a good thing if we're not using insurance. In a way, I hope we don't get calls for any claims, but I also like to be, helpful and useful. And, at that point they'd be like, hey, what are you even doing here if we're not getting any claims, right? So, but, yeah, kind of a double-edged.
You also have your brokerage license, right? And so,
yes. Yeah. So, I think originally we thought maybe I'd use it a little bit. I've traded myself, and that sometimes doesn't go that well. So I can't imagine, helping guys make decisions with that. We've talked before. We stopped on a couple of guys. I think we're close to Minnesota the other day, and we were talking to them, and they're like, "Hey, what do you do?" And I was like, "I just do crop insurance. That's all I do." And he's like, "Really?" He goes, "That's awesome." He goes, I like the fact that, you guys are specialized. You do this, they do that. Their brokerage, their LRP, we got certain guys that do certain things, and, we're all specialized, in our own thing here. And I don't want to overstep my boundaries of being an expert at anything else, and I don't want to call myself an expert, but I like to think that I know quite a bit about crop insurance, that way. So, I just think, I think people appreciate the fact that that's all I do is I do crop insurance, and then I'm also a producer with them. I'm in the trenches with them. Seeing how the farm economy is going, and it's tough, and I can see it too. So I think they appreciate that about us, is that we kind of see both ways of it. So
yep, and you can obviously kind of pick apart the brokerage side, and then kind of have at least like a little bit of a baseline to see how like the insurance would work as like a trigger point for sales and whatnot. But then you can also pass that decision making off to like Shane and leave it up to him.
Yeah, I leave it up to those guys. I leave it up to Adam, Freddie, and even Dan. I'm gonna turn those guys over to them, because they're the experts in that field. I don't want to try and make any recommendations, because I think if I start doing that, I'm not too great at that. I've tried myself, but tying all that,
Yep.
Tying the brokerage in and tying the insurance together and building your marketing plan, that's kind of why we all joined together, because we're like, we can throw it all together here and make something happen for them, and just get a plan together, so.
Yeah, and while we're talking through this too, like I feel like this definitely gives the producer like a lot better like visual too of like, when are we going to start claiming, and like when to do some specific trigger points. So I feel like anymore too, if guys can have a better understanding or better visibility, they're in a better spot too. And so this definitely seems like a great kind of marriage of both things together to provide a better outcome.
Yeah, and more important than not, yeah, more important than not, we kind of bring up the fact that, like when our coverages expire, when we're done in October and we have no more coverage, we got to start thinking about next year's already because the prices keep going on, whether crop insurance stops or not. We redo our discovery again in February. So that time between October and February has been super crucial, with maybe getting some stuff sold or putting on coverages, on the board and not with insurance, that's the way you can lock it in between that downtime of not having your coverage, on from February till October. So, I mean, that's the communication that we're trying to make with these guys is, hey, just because we don't have our crop insurance set, we probably should be doing maybe a couple other things to make sure we don't lose that price.
Yep. And it basically comes down to almost like a mindset shift of like, not just thinking like, what does like my bank require or something like that, but it's more of like, where's my insurance floor? And then like, how can I build a marketing plan around it? So that'll obviously take conversation, but I think if people are listening here, try to start shifting your mind with that sense.
Yep. Yep. I think keep marketing in the front of your mind all the time. Because I mean, we've talked to a lot of guys already, and they're like, I've kind of messed up a little bit, and it's like, yeah, it's it starts happening. Everybody gets busy, and they always like to put that in the back of the head. We got bins. Everybody bins their grain and everything, so it's kind of easy to be like, hey, I'm gonna bin it, and I'm just gonna wait. And you know what that works out a lot of times, but sometimes it doesn't either. But it's just part of the game that we play, as farmers. So
Yeah, for sure. So now that we're in 2026 here, I think you had mentioned decisions are made by March 15th.
Yep,
I
March
think it
15th.
was. Okay.
Yep.
What should producers do now, with enrollment right now? What should producers be doing or talking about?
Yep, I think we should be watching. We're going to watch the February price discovery come on right now. So I think guys should be watching that because I mean, the higher we go, right now, I think today we're up another 2-3 cents on corn and up another 10 on beans. The higher we get those prices for, it's December futures for corn and November futures for beans, the higher we get those, the better our guarantees sit at. So once we get through February, we got to be looking at, hey, if we do have pretty good prices, possibly doing some add-ons if need be, maybe reducing our underlying MPCI policy. I think adding ECO is probably going to be what we call the no-brainer. But then pairing that maybe with the private product on the side, could be a decision that we make. I'm not pushing private products on everybody because everybody's different. Every producer, when we come in and sit down, sometimes it just doesn't work out for a guy to take that specific product out. So maybe we just stick with ECO in our regular plan. And that's a great plan to do. So, I mean, it's going to be where you're sitting, how you're feeling, your comfortability with everything. And if you do market forward or not, if you don't forward market or don't do anything on the board, maybe insurance is the way that you hedge that, because that's the last thing you can do for hedging is that if you don't forward sell or do any hedging on the board, then insurance is basically your last option to do it with. And, it's subsidized. So it's a really good option to do it with because it's, you get a lot of coverage for a little money. So, I think that's going to be the conversation this year. So.
Got it. Anything else to add on our big crop insurance segment there?
I just say, if you guys aren't with us, then, stop in, have a cup of coffee, have some conversation, talk grain basis, talk insurance, talk LRP and commodities. I mean, we're here on Main Street in Alta. We love being downtown Alta. We prided ourselves on kind of being a smaller community and, trying to build this business up here. So we're having a good time together. Appreciate you, Nick, doing this stuff for us and helping us out with this. And just hopefully markets go higher here. So
Perfect. We'll wrap up here with just a couple more quick fire questions here.
I'm ready.
If you could only give one piece of advice to a producer about crop insurance, what would it be?
One piece of advice. For this year, I'd say take out ECO. That'd be the easiest standpoint if you haven't before, and if you have, I would say that. I mean, that's the easiest answer to say there, Nick. So that's what I'm going to say to you there.
Yep. Makes sense. Um, what about like a big mistake producers make with crop insurance?
I would say just reviewing your policy, because some points, sometimes a claim. I would say claims. Like when we come in, a guy sees his monitor. It says it's this and that, and then they haul it in, and all of a sudden they have a claim. And they don't realize it, and that's kind of why we turn claims in pretty frequently. We're like, you know what? Let's be on the safe side. Let's turn this claim in. Let's make sure the producer has it. I'd say claims is a big thing, or not, isn't that they have one in the first place because they just, if they didn't feel comfortable calling their agent on it or what, just kind of sometimes we lose track of stuff. So I'd say claims.
All right. Well, Jordan, this was great. Thanks for breaking down ECO, the subsidies, and why producers should be thinking about insurance as a marketing tool. Really appreciate you sharing your expertise here today on this call.
Hey, anytime. Appreciate it, Nick. Thank you.
If you are a producer and you want help figuring out your crop insurance for 2026, especially with these ECO subsidies, reach out to Jordan here at Logic Ag Marketing. He will be able to walk through your options with you. Deadline is March 15th, but price discovery starts in February, so now's the time to get in the office with Jordan or on the phone. So, and if you're already not getting the daily market newsletter, or you want to get on Jordan's insurance newsletter, just reach out to him. And so that's episode 6 of the Bushels and Beef podcast. Thanks for listening, and we'll see you next time.